Welcome back to Hitchhiker's Guide to Credit Repair. I'm Dinty. Today we're going to talk about buying your first car financed following some credit challenges. So this is a very complex thing because there's a lot of choices out there and there's a lot of people wanting to make money off of you when you're buying a car. So let's kind of break this into pieces. First, I'm going to talk about the types of cars you should look at. Second of all, I'm going to talk about the types of dealers you should go to. And third, we're going to talk about the bank financing you want. But kind of as a preview to all this, I want to go back to the first section for just a moment. So now we've gotten our secured credit card, which hopefully we've boosted up to $1,000 now. We have 1 or 2 department store cards. None of them have a high balance on them. And it's been about 24 months. You've removed all of your negative credit. So your credit score at this point should be somewhere between a 660 and a 690 with no previous car credit. And this is important because with no previous car credit, you're going to need a score that high for a couple of reasons. The second big thing to look at, and again, this is one of those areas I kind of cringe talking about it, but we need to talk about this. How much do you make? Okay, so if you're going to buy a new car for $20,000, and with the interest rate you're going to get, which is going to be somewhere between 17 and 21% most likely, that's a $450 car payment. So in order to qualify for that, you have to make at least $30,000 a year, or $36,000 a year gross. There's a couple of options here. If you can prove that income, great. If you're like me and you're self-employed or for 100 other reasons, then you can't prove that. And if you can't prove that, then you can't buy a car unless you go follow the steps I'm going to take you through. If you want to buy a more expensive car, like let's say you have a family and you want to buy a $30,000 car, right? So now you're going to have to make $55,000 or $60,000 a year to buy this car. And you're going to have to prove it. It's going to have to be proven over time, right? That's the first thing. The second thing is buy it by yourself. Don't commingle credit with anyone else. They may tell you to put on a relative or to put on a spouse or a girlfriend or grandma or mom or dad or whatever. If they tell you that, just leave. You know, there's other fish in the sea, but you can't commingle credit. This will significantly reduce the positive impact on your credit report. And because we're getting a starter car, right, we're going to want to maybe in 2 years, probably 2 or 3 years, trade up to a different car when our credit gets good enough we can get prime rates. So that's how we're going to do it. Now, second thing, kind of car to buy. Okay. Let's just talk generically. Best cars to buy if we're planning on trading them in 2 years and it's a starter car. The best cars to buy. Best cars to buy are going to be, of course, Toyota, Subaru, Mazda, and Honda. Those are going to be the best cars to buy. Tier 2, Nissan, Ford, GM. Tier 3, Hyundai, Kia. Tier 4, Mitsubishi, Fiat. Those are going to be the tiers. I'm sorry, Volkswagen would probably also fall into a tier 3 or 4. It certainly doesn't fall into a tier 1 or 2, given all the problems that Volkswagen's had over the past few years. So, we're going to go and look at cars, okay? And the first thing you're saying to yourself, well, I obviously should just go right to the Honda or Subaru dealer or the Mazda dealer and just buy a car because that's where the best cars are, right? No, that's not right. First of all, you can't buy a car when there are no cars in stock to sell you if you have bad credit because they won't even talk to you. So, and again, I know you're a 680 or 690 and you think you're doing well, but you're not. You still have bad credit because you don't have a high credit line on your account yet. And so, no matter how good your score is or how perfect your payment history is, with $1,000 high credit, your credit's still bad. You're what's called a ghost in the business. So, here's the next thing we're going to do. So we're going to look at the car companies that will provide dealer financing and the dealer financing through the car's make. So in other words, Chrysler Capital, Toyota Motor Credit, Nissan Acceptance Corporation, Ford Motor Credit, GM Financial. These are all companies I'm talking about, right? And we're going to go and we're going to see which one of those is going to give us the best deal. Now, I'm putting a list of the ones here that are the best ones, the second best, and then the worst. This is based upon today, right now, at this minute. These things change, right? The other problem is that the car you want or the car you need, I take that back, the car you need may not be available. For example, Chrysler, which used to sell the Dodge Journey, which was a great starter car, and the Dodge Dart, which is another great starter car, no longer has those cars. So now you're going to have to buy a cheap Jeep, or that's really it, because you're not going to buy any other car that they sell. I mean, a Durango starts at $45,000. You're certainly not going to buy that. So if you want to go with them, there's very few choices. Toyota has several choices. If you have to, you can get a stripped RAV4, but you're better off getting a Corolla. Honda has one choice. It's a Civic. I don't think there's an Accord around for less than 30 grand now. And then Mazda, and Mazda makes a great car with a great resale value, and it's just a great car all around, but you got to bring your own financing with you. Same with Honda, because they're only going to take good credit, right? Now let's go to the Tier 2. The Tier 2, Ford. Always a good bet. Ford, depending on the day and the way the wind's blowing and your inventory situation, will buy very deep. Sometimes deeper than Toyota, although honestly, Toyota buys the deepest. Nissan, same way. But this is very much car dependent. Go in, buy a car like a Versa 5-speed. They still make that. Something like that. Something that nobody wants. It's been sitting there a lot for a long time. They will finance almost anyone on that car. But if you go in asking for, a new, I know it's popular, Rogue, a 2022 Rogue or a 2022 Pathfinder, you're not going to get financing on that unless you have perfect credit. And even if you do have good credit, they're going to hit you with a high rate. So that's Nissan, right? Volkswagen, again, I've seen Volkswagen buy deep, not very often. Now let's talk about the 500-pound elephant in the room. Well, why don't I buy a Hyundai or a Kia? They have lots of good starter cars for around $20,000, both those brands. The reason you don't want to buy from those brands is the resale value. It's terrible. Now, you say, oh, it's better now. Yes, it's better now on some cars, on desirable cars. But you compare a Honda Civic or a Toyota Corolla to a Kia Forte or a Hyundai, I don't even call it anymore, the one below the Sonata. Those cars have really bad resale value. And the worst resale value, although you might be able to get financing through Allied Financial, they sometimes do buy deep, is Mitsubishi. Mitsubishi has fine cars. I mean, the new Mitsubishi Montero Sport is basically exactly the same car as a Nissan Rogue with a 100,000-mile warranty. And if you're looking at a Rogue and you've got good credit, I might recommend looking at that, but you don't, so don't get a Mitsubishi. The thing with the Mitsubishi is, yeah, you can buy it, you might be able to get a good deal on it, but you better keep it until the wheels fall off, because it'll never have good resale value. And so those are the issues. Okay, as far as GM goes, what to look at with GM. Sorry, GM. All of your cars are, they're worse than Kia and Hyundai. Even the Blazer, even the Equinox, they're just bad cars. You really got to get into a truck before you're looking at a good car with GM. Honestly, their execution on small, low displacement cars has been terrible. Ford doesn't sell cars anymore, but they do make a few cars you might be able to afford. So, maybe Ford. Maybe if you have a family, you might want to buy a Ford. Of all of the mid-size SUVs, the Explorer is always the cheapest if you get one stripped. If you find one stripped on a lot, it's been there for a while, so that's a good choice too. So now we've talked a little bit about the car financing companies attached to the car manufacturers, and now we've talked about which kind of car you should buy in terms of resale value, okay? So if you look at your first car, I know everyone out there is saying, oh, I can't afford a payment of $450 a month. Well, that's too bad. That's what the payment's going to be. But definitely don't look at any car over $22,000 without, if you're going to put anything down, and, even if you're putting nothing down, even less than that. But don't look at any cars over $22,000, $23,000 if you want your payment below $500 a month. Just understand that, okay? Now, here's a second issue. And I hate to bring this up, but I know that a lot of people who are coming back from an issue either don't make a lot, make $36,000 a year or less, or they might make a lot more than that, but they're in some sort of non-provable income situation. Okay? So those people absolutely have to, no question, unless there's one little out you could take. One path you can take, which is the bad path. We'll talk about that in a minute. But other than that one little path you can take, you're going to have to go with Chrysler Financial, GM Financial, Toyota Motor Credit, Nissan Acceptance. And this is why. Because those people understand that the hardest thing about getting a car deal done is putting the structure together. The structure has to do with the payment, the amount paid, the amount that the car is going to go out the door for. So in other words, if it's a $22,000 car, is it going out the door for $22,000 because you're putting money down to subsidize that? Almost never. So it's got to go out the door for 125%, which is as high as you can go with bad credit, right? So, and the dealer is going to put you at 125% because they want to make the most money. So you're at 125%, okay? And that's what's called on the front side. The back side are warranties, service contracts, stuff like that. I don't want to advise you to buy or not buy those things. Gap insurance you should probably always buy. Although be warned, gap insurance from a dealer is going to be about $900 and it's only worth about $500. But you can always get a refund on your portion when you either trade your car in or refinance it later. And you have both of those options, okay? So, if you legitimately make $36,000 a year and you can prove it, and I'm at the job a couple weeks, you've been at the job at least a few months, and you can prove it, then you can go and you can get a car loan from several banks or maybe even your credit union, okay, with a 680 beacon or a 660 beacon, no car credit, no high credit that would justify that kind of loan. If you can prove your income, and that's extremely important, okay? Now, there are two different types of lenders out there. There are lenders that are called full spectrum lenders, and there are lenders that are regular lenders. If you go with a full spectrum lender, and Toyota Motor Credit, Nissan Acceptance, all these companies I just mentioned are all full spectrum lenders. Capital One's a full spectrum lender, Chase is a full spectrum lender, Wells Fargo is a full spectrum lender. Bank of America, I'm not sure about. US Bank is. So these are the lenders that are full spectrum. Now here's the thing about a full spectrum lender. As soon as you sign your paperwork, the dealer gets the money immediately. And that means that they're probably not going to call you and ask you a million questions. Typically, with a regular lender, the lender will look at the application, verify it, and then they will send a check to the dealer. Obviously, the dealer prefers not to have that, and that's another reason why if you get your own financing, dealers don't like that either. All right. So, in any event, if you have, a thin credit or you're a ghost, your best bet is probably going through a full spectrum lender. And your best bet in terms of getting the deal done is go to the dealership with a car in mind. Now, what dealership? What car in mind? What should I look for? Where am I going to have my best shot? Okay. Best you can do is ask your friends. Find out a friend of yours who's pulled up in a new XYZ, a Corolla, a Civic, a Rogue, a RAV4, something like that, that just got, and go up to them and say, where did you buy that and what was your experience at the dealership, right? There are vastly, vastly different experiences, okay? If you go into a dealership on a Saturday afternoon and you have bad credit, chances are you're not going to leave with a car. In fact, chances are you're not going to leave with a car at all. So your best bet's to go in there, you might want to call and make an appointment to look at a car and go in there, 11 a.m. on a Tuesday. Sometime when there's not a lot of customers, the dealership will work for you a lot harder. Second thing, if you're trading in your car, for God's sakes, clean it. Get the oil changed. I know if your car's worth nothing, that doesn't matter. Again, it's what the dealership's going to do for you. If you're bringing a super clean trade, the dealer will like you a lot better. So, and you're going to have to trade because no matter what, you're not going to be able to make the down payment that they think you need. So, trade in that car. I know it's probably only worth $500. I appreciate that, but trade it in anyway. That's kind of part of the deal. The dealer's going to make a little money on the trade, so they're going to go to bat you a little bit more on the car loan, and that's okay. That's just the way it works. You really want to sell a $500 car on Craigslist for $1,000, knock yourself out. But I wouldn't want to. Any car that you're driving at this point is probably dangerous and has problems that you wouldn't want to inflict on somebody else. So the best thing to do is just let the dealer deal with it, right? So get rid of your hoopty, trade it in, okay? If you got a $3,000 hoopty, okay, push the dealer for $3,000, but take 25, right? But chances are you got a $500 or $1,000 car that you're going to be, slowly dragging into that dealership on one good tire and a bad battery and a bunch of fender damage and some rust. That's what I would expect you to have, right? So you're gonna go into the dealership. You're gonna go in there with your car to trade in. You're gonna capitulate to a large extent, but you're gonna have to not go to the candy store. Now, this is a car salesman expression. What happens is they will try and land you on a car based upon what they think you'll be able to afford, and that's based upon not what you want to do, but what the banks will do, right? And what will happen is you walk in there and say, "Oh, but gee, I wanted leather, and I have to have heated seats. I have a bad back, or I have dogs, so we need a third row seat." Okay, that's fine. You're not going to be able to buy a new car at a retail car dealership, all right? So don't go to the candy store. Pick out your car. Now you say to me, okay, you know what, Dinty, I just can't afford a $450 payment on a new car. Are there other options for me? There are, but I don't recommend them. But let's go through them, okay? CarMax. CarMax will sell you a car for the absolute high retail, no brakes, higher than a dollar higher than the highest car sold in that area. That's that same car. It will always be more expensive, okay? Now, CarMax has this thing where, they inspect the car. I've driven CarMax cars on test drives before. They're the same cars. They may slap some tires on there, but they're the same cars. I drove a Dodge Journey, a 3-year-old Dodge Journey with 30,000 miles on it when I was thinking about getting a new car recently, and it had 4-wheel drive and a 6-cylinder, which is the only reason I was looking at it, and it was just junk. There were problems with a lot of things on that car. Tie rod ends were going bad. I suspect that the brake master cylinder was going bad. And this is not a car with 30,000 miles on it, okay? Don't believe the hype. CarMax is a used car dealership, full stop. You want to buy a used car, you can go to CarMax. You'll have less hassle than anywhere else, but you also pay more money. And they do provide their own financing. So you say, well, they'll provide their own financing, right? Yeah, and are they going to check my income? I don't know. Probably not. But here's the problem. They're already charging you 125% loan to value on the car before you have sales tax or fees or anything else. So your down payment situation is much, much worse. When I go into a retail car store and I buy a car at sticker, I'm only paying about $30 or $40 more, maybe $100, but never more than that these days, than I am at invoice. And the invoice is what is the number that matters. So on a new car, you have an invoice, and then you can go to 125% without major penalties. So you can buy that car with not very much money down, and you can drive it away, and now you have a new car. And you're going to need to trade in that car later on, so take care of it, right? Because you need that trade to be even or better when you go to trade it in. It probably won't be, but keep it as close to that as you can. So, because remember, you're paying so much interest, your principal is not going to be that much. So by going to CarMax, what you're doing is you're buying the car at that 125% limit. And then everything else, sales tax, registration, fees, all that stuff, any kind of anything else, all of that stuff you have to pay in form of a down payment, right? And you're not getting a very good deal on the car, at least not these days. I remember when I bought a Dodge Journey, that was my starter car in 2018, I paid $19,100 for it. You can't buy any Dodge Journey on CarMax's lot for under $19,100, whether they're 4 or 5 years old or not. So yeah, no, probably not the best way to go. Can't do it though, okay? There are other options for lazy people, okay? Carvana. Carvana is a company that was formed out of a company that provides loans to bad credit people. That's what their specialty is. That's what they do. They also own, I can't remember now. another nationwide chain of people of a bad credit financing a car dealership. Drive Time, they own that too. Carvana has been banned from doing business in a number of places for their practices, and they are the same as CarMax. They will provide financing, given the fact that given the way they process their licensing paperwork, and they're not selling you full spectrum loans. I'm just not sure I would trust them. But that is it's another option. Drive Time is a third option. Okay, the fourth option, the worst option possible, is going to a buy here, pay here. Because regardless of what they say, they're not going to report to your credit, and their goal is to get the car back and sell it to somebody else. So you're not even really buying a car at that point. So go into Toyota, look at, now whether you want it or not, okay, I want you to do this once, just once. Go look at the cheapest car they have on the lot. The cheapest. Don't worry about buying it. Just go find the cheapest car on the lot. Apply for financing. Just tell them you're going to trade in your car, and tell you put down $500,000, just a minimal amount, and see what they come up with. If it's good, then you might want to say, well, I really need the RAV4. I really need this. I really need that. And then go shopping. But my advice to you is don't worry about the car. You need a new car. You need a new car to get a house. You need a new car to get a better car. You need a new car to get a higher limit credit card. You need that car. New cars are best because the loan's going to be the best. It's going to be the way that you're going to be able to squeeze the most out of your situation. So look at that new Toyota Corolla. Look at the cheapest one on the lot. And if they approve you for it, I don't care if it's white, red, green, blue, or brown, buy the damn thing. Okay? Leave happy, okay, knowing that 2 years from now, if you make all your payments, you'll be able to trade that car in. Okay, now let's say you're like me and you're like, oh, I'm so happy to have this Dodge Journey because I've been driving, that time I was driving like a 97 Buick, so I'm so happy to have this 11-year-old newer Dodge Journey with 200,000 fewer miles on it. So I'm happy. I'm going to keep this car till the wheels fall off, and that'll last for about 4 or 5 months, and then you want to get rid of it because you probably aren't going to be happy. And that's the whole point. Nobody's happy with an entry-level car, right? So at this point, you have two options, okay? You can trade it in, or you can refinance it. Now, again, if you're going to refinance, you have to be able to prove your income. This is very important, okay? Now, if you buy a car and you make fewer than 24 payments on it, and you go to trade it in, you're going to lose, okay? You can't do that unless you want to just throw a lot of money at it. Which you might. You might really want a better car. And you can do that if you want. If you got $3-4 grand to throw down on it. But if you don't, you got to wait 24 months. And I know it's going to be tough. I know you got the kids and the dog and the, and the cat and the wife and the uncles and the aunts and the kids from soccer practice. And they all want a bigger car. And they're all bitching because you got a Toyota Corolla. It doesn't matter. I want you to consider the fact that it's better than that Chevy Venture van you were driving before. That is your alternative, right? You don't have an alternative of driving a new 4Runner or a Highlander or a new Nissan Pathfinder. Those aren't options quite yet. You need to wait 24 months. And remember, that was 24 months. It's the first 24 months. So from the time we started working on our credit, we are now at 4 years. Okay? Now we're going to look at buying a house. Before we trade that car in, we're going to look at buying a house. That's something we should do before we get a higher car payment on our credit report. If you want to refinance and you make the money, most credit unions, I know Mazuma here in Kansas City, as long as you have paid all your payments, pretty much doesn't matter anything else has happened, they will give you a 5% rate drop and they will increase your term so that your payment goes way down. You can do that, okay? There are several options. However, bear in mind, you're going to have to prove your income. Eventually, you're not going to have to, okay? When you're a solid 700 or a solid 690, nobody's going to ask you to prove your income. But right now, everybody is, except for those few full spectrum lenders we talked about earlier. So I'm going to close with that. Next, we're going to talk about buying a house. This is Dinty, Hitchhiker's Guide to Credit Repair. Thanks for watching.